Hi, I'd like to talk through our unique service offering and the various elements to it. The first part is pension planning. Now we know that when somebody starts their career, usually in the 20s, it's essential for them to consider pensions. Obviously, the earlier you start a pension, the longer you have for your money to grow. However, as people move between jobs, they can quickly lose track of their pensions. So pension planning involves regular reviewing of someone's pensions, how they're performing, and if they could be better invested elsewhere. Investment planning. Now, this is usually relevant when people are from mid-30s onwards, where they've got some surplus income, or they received a significant inheritance lump sum. Now, typically, investment planning is for very specific goals before retirement, such as children's education, paying off a mortgage early, or helping children get their first home with the help of Bank of Mum and Dad. So investment planning will look at the solutions available to meet these goals, usually involving tax-efficient investments. The third part, retirement planning, usually from about your mid-50s onwards. And as you approach retirement, you get a much clearer idea of your financial needs for retirement. Now, it's important to understand that a person's income needs can vary hugely in retirement based on someone's activity levels and health. So we need to consider how much someone would need annually during each phase of their retirement and the associated healthcare costs and other expenses. So this phase really focuses on something called cash flow modelling. And this helps us to create a very specific plan to meet a very specific goal. Fourth element, retirement management. Usually most people retire hopefully in their 60s. Well done for reaching retirement. And at this stage, the focus shifts to managing your funds and your wealth. What you can do in retirement, you can decide on your annuities or to manage investments to preserve the capital whilst also generating income. It's important to adjust any strategy based on changes to market conditions or personal circumstances, so it has to be reviewed regularly. And what's even more important is absolutely crucial to ensure that someone doesn't outlive their savings. And the final part, inheritance tax planning. Now, this can be done any time, but really becomes more relevant post-retirement when your amount of funds available is clearer. So if you have significant wealth, then you may want to consider inheritance tax mitigation. Strategies for this might involve gifting, trusts, or other ways to minimize the tax burden. Now, we know that every person's situation is different. And with our holistic service, clients don't need to worry about deciding for themselves which part of the service is relevant and what each one might cost. And the reason is, our promise is that if you need any part of the service, you'll receive it. And all as part of our standard fee. Click the image below to get more information on each part of the service, or just give us a call and we'd be more than happy to discuss your situation. Thank you for listening.